after the success of the last video where I gave you the prediction of the fake out to all-time highs down to the big important support of $101,000 for another bounce to the upside, I wanted to bring you another similar style video today where I am once again going to be talking you through two main predictions that I am looking for based off of an Elliott Wave count that I have here. So option number one that we're going to be looking for here is a move up for then a pullback in wave 4, and the second option is an extension in wave 3. So now what I am looking at next, I've got a lovely Elliott Wave count going on here where I have a few different options that I want to talk you through. First is another rise to the upside. To take out $106,000, I have my alerts ready and waiting for key levels of price action which I am willing to trade. My main target right now actually sits just above $106,000, where it is a reactionary based trade. I do need to see if we get a bearish reaction or not. For me to activate the short, I would actually want to see this come into the level and get a nice rejection visible on the order flow and of course the chart itself with the candlesticks for an activation of the short for bringing it right back down, because alternatively we get the reclaim of $106,000. There is no bearish reaction, and then I will look for continuation of the wave 3 more impulsively towards all-time highs. So this is what I would say my first conservative target is, and then moving on to the 1618 all-time highs, a much stronger wave 3 scenario. But the Elliott Wave count is what I am basing this analysis off of. I also want to bring to your attention something that I feel is very important, and that is the percentage of pullbacks that we have seen during this trend. And the pullbacks that we have seen since the reclaim of $83,000 have all been less than 5%. So I just want to highlight this to you. Pullback here, 3.5%. Pullback here from the high to the low, 4%. Let's call it 4%. Another pullback here, 1.5%. Pullback here, let's call it 3%. Another pullback here, 3.5%. Another pullback here, 4.5%. And now we see the pullback from the value area high to the daily naked point of control, 4.5%, 5%. As you can see, the pattern of this trend is we have not yet seen a pullback greater than 5%. And I think paying attention to the trend in this pattern is what makes me believe, first of all, it was a very technical low, the exact level that we were looking for to make the low. On top of that, we've now seen a wonderful rise and another secondary test of this low to build us up with this triangle idea. And I am looking for continuation, saying that this is a major important low. Why? Well, not only is it into an important support level, but it also follows that trend of the trend that there is no greater than 5% pullback. If we pull back from the high to break down through $100,000, that is the first time since the reclaim of $83,000 that we have seen such a heavy pullback. I love this trend right now. Of course, I have my longs from $79,000, but I love this trend right now because of the way that I'm viewing it. The trend is strong because there is no heavy pullback. A lot of people waiting for a heavy pullback to get in are on the sidelines. They are missing out. So I believe we can continue to squeeze up again here, make another new high. That is where maybe we get the buying climax, the full FOMO. And I believe that when the dip finally comes, a lot of people are waiting for that first heavier dip to get involved in. And my thought process, first of all, is that when that dip comes, because it will come, okay, it will come, there will be a drop, a heavy drop. And I believe that when it comes, everybody that's sat on the sidelines waiting for this dip, they're going to get involved at that first bit of the dip. And then it will end in a scenario where the dip is much greater than what they expected. And it kind of waterfalls and avalanches through a lot of stop losses, a lot of liquidations, and longs are left underwater as they finally got their opportunity, which was a dip that kept on dipping. But of course, they originally think it's just the dip to buy. Whereas I am under the viewpoint of we have to be more aggressive in this trend because we are to breach up to make another new high before we get an avalanche to the downside. As you can see in the Discord, I've talked about live in the time as I was taking my trades. As soon as I took my long trade, I was telling my Discord. If you want to get involved in the Discord, the whole educational library, and get yourselves to trade along with the champions, you can check out chartchampions.com right now. We actually have a brand new revamped course section with or everything laid out in a brand new style for you all. So yes, I do remain bullishly biased right now. I am looking for another new high to come above $106,000, and from there I will trade the reaction. Whether we get continuation squeeze to the upside towards all-time highs, or whether we see the fake out prior to all-time high and a deep dip to come first. I am actually happy with either scenario. Right now, I am in my long trades, but I will take a short. I will take the short if I get that big bearish reaction. I'm not going to have analysis paralysis. I'm not going to become super bullish at the high, but I will be ready and waiting if given the opportunity for that massive, big short trade. I hope I've been able to get you ready and prepare you and educate you in this video. Thank you ever so much, and I will catch you in the next one. Cheers, champs. If you want more, chartchampions.com.